Paying yourself incorrectly, it creates a quiet risk with the IRS. It creates cash stress and year-end cleanup you do not need. Becoming an S Corp is a great strategy as you continue to grow your business. But what happens is when new clients come in, they don't know that they were supposed to be paying themselves a reasonable compensation. And so they don't pay themselves enough throughout the entire year. Quarter 3, quarter 4 rolls around when we're doing our mid-year check-ins for our tax clients. And we realize that business owners have not paid themselves enough throughout the year through payroll. We end up having to do large payroll runs, moving draws from the balance sheet to the income statement, and creating large tax bills that need to be paid at the end of the quarter. One of our clients this year, after she came out of onboarding, we started sending her snapshot on a regular basis. And we realized that she was only paying herself about $35,000 a year. Now, in her state where she's located for what she's doing in her business, $35,000 is not considered fair or reasonable by the IRS. So what we needed to do in December, when she was finally ready to have this conversation, was to move all of the draws that she had been taking throughout the year into her payroll. That created a large tax bill that she needed to pay in December. She was prepared, she was ready, she had the profits for it, but that's not always the story. We had other business owners who were not able to make that tax bill, who are not able to move their draws to payroll. They are going into next year knowing that they didn't pay themselves enough and that they didn't have the cash to cover that tax bill to go into the end of the year compliant. When you become an S Corp, you are now an employee of your business, which means that you are paying yourself through payroll. The benefit of becoming an S Corp and paying yourself through payroll is to save money on self-employment tax. So you are no longer paying those dollars in self-employment tax. You are paying yourself through payroll, paying payroll taxes. So yes, there's a tax benefit. I think more importantly, if you know anything about me, I like to talk about creating wealth and having a healthy, sustainable business. So becoming an S Corp also allows you to be an employee of your business, meaning that when you go to buy a new home, when you go to buy a new vehicle, you now have paycheck stubs. You now have a way of showing that your business pays you on a regular basis. You also create a healthy and sustainable business. When you can show investors, bankers, a potential sale in the future, you are showing that the business can afford to pay you as the business owner. It is important that we create healthy, sustainable, and profitable businesses. You know, it's interesting over the last 11 years, how many business owners said to me, I'll never sell my business. I love doing what I do. And eventually, as time goes on, the right buyer comes along, an employee comes along who is a perfect fit to buy into that business. And the clients who are able to maximize the value of their business, what they receive as they exit, those are the business owners who have been paying themselves through payroll, who can show that this is a valuable business, that it can pay someone the salary of a CEO and still withstand the profits needed to continue on in that business. Now, when you become an S Corp, you are now an employee of your business. You are paying yourself through payroll. What's next? We have to pay you as a business owner a reasonable compensation. This is an IRS rule. The IRS says that you need to pay yourself the amount of money that you would reasonably pay somebody else to do your job in the business. Now, we use a tool here at KSA Tax to give to every single one of our tax clients. We use a reasonable compensation report so that you can withstand up to any audit. Now, I want every single business owner to be able to have this in their hand because this takes into consideration your role in the business, your success of your business, your location, and how much you would have to pay someone else to do this job. Now, you can do this on your own through something like a salary.com or another tool if you need to. I want you, every single person listening, if you are an S Corp, you are paying yourself through payroll. want you to go into your payroll system right now and pay yourself a reasonable compensation. You're going to thank me at the end of the year, I promise. This is going to allow you to get paid regularly. So, from a cash management perspective, you're going to get paid at the same rate as your employees get paid. So, everyone here at Kickstart Accounting, they get paid weekly. And so, I, as a business owner of an S Corp, get paid weekly with the rest of my team. So, you're going to start paying yourself right now in quarter one your reasonable compensation. What we see happen is that business owners avoid this. They say, really don't have enough cash for this right now. I really can't afford to pay myself the payroll taxes. I'm going to wait. Quarter two rolls around. Well, now it's my slow season. I definitely don't have enough cash to pay the taxes on this. Summer finishes up. Now, mind you, these are the same business owners that still have to pay personal expenses. It's not that you're not paying yourself. These are the same business owners who are commingling business and personal, who are taking out cash as owners' draws, paying their taxes through their business. And there's nothing wrong with doing those things. However, the IRS says that until you've paid yourself a reasonable compensation, you cannot take out draws of your business. Taking those distributions, that is a benefit of becoming an S Corp. But you have to hit the requirement of paying yourself through payroll before you can enjoy the benefits of taking draws through your business. We need to pay attention in quarter one. I want you to move expenses around. Pay attention to the expenses that you have going through your business because you need to pay yourself a reasonable compensation through payroll before you take draws, before you make the tax payment through your business. This catches up to us regardless, whether we do it now in quarter one or we do it later in quarter three and quarter four. So right now, I want every single one of you to take your reasonable compensation report and go and update your payroll. You are going to put yourself on payroll and the same cadence you pay your team. Throughout the year, you're going to look at your financial statements. You're going to look at your snapshot. You're going to see how much you paid yourself through payroll. You're going to find that information on the income statement. I want you to compare that to how much you've paid yourself in draws last year and this year. And I promise you that you're going to step into your confidence to say, yes, I am the CEO of this business. I am taking control of the financial future of my business. And maybe this isn't creating profits this year, but long term, this will help you create a profitable, healthy, and sustainable business so that we can be in this for the long haul. If you want clarity before this year gets busy, we have a limited number of tax slots available. Go and book your discovery call at kickstartaccountinginc.com so that you can talk to our tax team. Learn about how reasonable compensation impacts you and your business. Let's set you up for success early this year. Let's not wait to go to kickstartaccountinginc.com, book your discovery call. Let's finally take control and come into this year with clarity and confidence.